The last key step in preparing a financial model is stress testing it. The ability to stress test a financial model and find any flaws within it is a useful skill in improving the quality of financial model. Stress testing also ensures no errors will occur in the future when the model has been handed off to the final user. Let's talk about error checking. What exactly you should check to make sure your financial model is error-free. First of all, does the balance sheet add up? Do assets minus liabilities minus equity equal 0? Does your balance sheet balances? Does the change to retained earnings in the current period equal net income minus dividends? Does the ending cash balance in the cash flow equal the cash balance in the balance sheet? Do ending values in the supporting schedules match the corresponding values in the core statements? One master error checks to determine whether all of the above are resulting correctly. If your balance sheet is out of balance, there are several ways you can check and find what exactly is wrong in your model. First of all, always calculate amount out of balance. Then check out of balance amount for consistency with any balance sheet or cash flow statement line item. Try to divide out of balance amount by 2 for a sign error on balance sheet or cash flow statement. If the difference is the same each period in your amount out of balance, then beginning balance is probably the problem. And if period 1 balances but not later periods, then you've probably forgot to copy across your formula somewhere in your model. Let's talk about top errors in financial modeling and how to prevent and diagnose them. First of all, faulty subtotals. To prevent, build for historicals and never hard code. Check to source and copy across. For diagnosis of faulty subtotals, use F2 function 2 for visual reference as your shortcut and sense check over time series. Another common financial modeling error would be signs the wrong way around, especially on cash flow statement. In this case, you need to use the rules of cash, meaning if it's a cash flow, the sign should be positive. If it's cash outflow, the sign should be negative. And use the structure liabilities and equity one way, assets the opposite way. For diagnosis of that error, structure check line by line and sense check over time series. Another common error in financial modeling might be historic balance sheet feeding forecast incorrectly. In this case scenario, the prevention would be one feed rule, inputs hard-coded once only. And you need to use formatting for visual reference. As we have discussed, your inputs or hard-coded numbers would be in blue and your formulas would be in black to identify the numbers easily. And historic numbers should never be calculated. It would always be your inputs from financial statement of the company, except for subtotals that we would advise to calculate manually. As for diagnosis of this error, you need to check if balance sheet out of balance by the same amount each year and visual check of historical backup calculations. And last but not least, top error we would like to mention in this video is bad clicks, usually off by 1 year. So in this case scenario, you need to check if the final year shows 0 on one of the line items and stress test by changing year 1 assumptions. To diagnose this error, use labels when building the formula. You need to do regular structure checks and sense check over the time series. In the next video, I will show you the real life examples of these types of errors in financial models and how to track and prevent them.